Dunedin Income Growth Investment Trust is one of the oldest investment trusts in the UK. It started in 1873 to finance the railroads in the United States of America. It can invest in UK companies, and it can also invest in overseas companies up to 20% of its gross assets. The Trust has achieved a good dividend yield over the years by investing in the right quality companies that have strong balance sheets, good management, strong sustainable cash flows as well. Recall that at the time of the financial crisis, a number of companies not just cut their dividends, but completely eliminated them altogether. The good thing for Digit shareholders at the time was that we did not cut our dividend at all. So we start in terms of the Aberdeen investment process by looking at the quality of the companies that we think about investing in and making sure that they tick all the boxes in terms of our quality process. And then we will regard the level of price in terms of valuation and decide whether or not now is a good time to be investing in the company, but take a long-term view as well, typically at least a 5-year view in terms of our investment horizon. Over the past couple of years, we have increased our non-UK exposure, and the reason for doing this is twofold. The first is to diversify the income stream, just in case there is a situation where there's a problem with a single level of income, and that we can invest overseas and diversify that level of income from a single source. And the other aspect is to gain exposure to industries that you can't gain exposure to within the UK. And an example of that might be industrial gases, for example, where we have invested in a German company that is offering industrial gas services globally, but we couldn't have done that had we not have had the mandate to invest in non-UK companies. One of the major aspects of the Aberdeen investment process is that we do not invest in a company without first having seen company management, and it can take a number of meetings before we get comfortable with that company as a potential investment. Aberdeen Asset Management is certainly a very active investor in terms of us taking our due diligence extremely seriously and committing to a stock price over the long term. But in terms of active management, we're very bottom-up stock selectors. That will mean that there will be times when we take positions that are very different to a benchmark position. Risk for us has nothing to do with our positioning against a benchmark. Risk for us is investing in the wrong type of quality stock or indeed at the wrong price. Certainly for UK investors, there is value to be found in the market. We can find the right kind of companies, good, strong companies with the right balance sheets, sustainable cash flow, and we can find them at what we believe are fairly attractive values at the current time. We think Digit is an excellent product, and it should be a core product for any private client's portfolio. The reason for that is that we have maintained the level of dividend for Digit, and we'll look to try and increase that dividend over the coming years.